Good morning. The 2026 mortgage trap that could cost borrowers $100,000. And a 0.5% change in mortgage rates can cost borrowers pretty close to about 60,000 right now. And right now, many buyers are walking straight into a trap. And most borrowers think that mortgage rates move slowly, but they don't. And in today's markets, rates can shift daily and even hourly. And those small movements can quietly cost you tens of thousands of dollars over the life of your loan. And this Iran conflict is not helping that situation. So let's break down the 2026 mortgage trap and how to avoid it. And this is where small rate changes can equal massive cost differences. And here's what most buyers don't realize: a 0.5% increase in rate can significantly increase your monthly payment. And over 30 years, that difference can easily accumulate to, say, $60,000 to $100,000. And the bigger your loan amount is, the bigger the impact is the point. So, say for example, a $500,000 loan versus a 6.5 rate and a 7% rate, you're looking at a monthly payment difference of about $160 to $200. And that range will put you right at about $70,000 in total costs over 30 years. And that's the trap, my friends. It doesn't feel like much in the moment, but it compounds over time. So, why waiting for rates to drop can backfire? Well, a lot of buyers are sitting on the sidelines thinking, well, I'll wait until rates come down some more. And here's the problem with that is that you're trying to time the bond market, which is realistically, it's very hard to do. Nearly impossible is probably a better way to say that. And rates can move higher, but before they move lower, home prices can also increase while you're waiting. So it's a double-edged sword. Competition can intensify when rates drop, and that's when prices lead back up again. So waiting can often lead to a higher purchase price on your home, a lost opportunity, or a worse overall deal structure. So let's talk about the power of rate locks. And professional borrowers don't gamble with interest rates. It's better to lock early and locked often. And in doing so, you're managing risk. And that's one of the most powerful tools available through a rate lock. It protects you from market volatility. And it also secures your payment structure. And it provides certainty in an uncertain market. And in volatile environments like 2026, this is not optional, it's strategic. So, how smart borrowers structure around rates. And sophisticated borrowers don't chase the lowest rate, date the rate, and marry the refinance. I forget how it goes, but you remember. Lock timing was when to secure an interest rate. And if you have a float down option, if rates improve, that pricing can get better. And that's where strategy, maybe considering a fixed versus adjustable, or planning a refinance from day one. So here's some questions to ask. How do I control risk and keep flexibility? And that's a completely different mindset than what's today's rate. And the real trap isn't just higher rates. It's waiting too long on the sidelines, or locking too late in the process, or structuring the loan incorrectly up front. And these three mistakes right there can cost you, say, $50,000 to $100,000 over time. And strategy is more important than timing. And here's the truth: you don't need to be perfectly time the market. What you do is need a strategy. And that includes knowing when to lock your interest rate in, understanding that rates move all day, every day, and when they're trending, which way and which not. So structuring flexibility into your loan is another important topic, but also having a refinance plan for later. So the final thought is, if you're buying or refinancing in the next 12 months, this is where deals can be won or lost. And most borrowers focus on the rate, but professional borrowers focus on strategy and planned refinances. And if you want to structure your loan the right way with like an experienced investor and high level borrowers, let's talk some more. And you can visit my website, billraponline.com, to figure out how to get hold of me. Love to talk to you more. Have a good day.